Good evening, all. Ira Epstein on another crazy trading day. It is Tuesday, the 12th of March, 2024, and the time just about 6:35 p.m. Central Time. So we got a hot set of numbers in the CPI. Basically, it was a beat on just about every category, only by a tenth. So don't think that this thing's running away with inflation. But it was another month that says the first 2 months of the year were hotter than expected. The question is, now the argument that will develop between analysts, will the Fed be cutting this year? Will it be cutting in June? Will it be cutting later than that? If it does cut, how many and why? Because so far the argument has been, and I think you'd agree with me, inflation has not proven easy to fall the rest of this way. The easy part was over. We saw that the low-hanging fruit was taken in the first year or so of it. But now trying to get this extra mile is always the difficult part. The good news is we did see on the jobs report that unemployment did go up to 3.9%. But the question is, what do? You had a name like Ken Griffin today come out and say, don't be too fast on it. Another big name that I like is John Rogers from Ariel Investments, who I happened to live in the same building with him many years ago, and I knew him. And to make a long story short, this man has called these markets very well. And he is fearful that NVIDIA and other things, that reminds him of the bubble that we saw back in the 2000 period. Okay, I don't know if that's right or wrong. I know that NVIDIA is on fire. Today it corrected back up a little bit. We'll see what goes on there. In the metal markets, the high idea that interest rates may stay a little higher than longer may be weighing on the market. But more or less, I think the market's just looking for reasons to put in a small correction here and decide if the uptrend's going to continue. API numbers came out in the energy markets, and they were all on the decline side, and that offered some early evening support through here. I understand that ship has left Cyprus. It's at 3 miles an hour. It's heading to Gaza. That's what I've read in the latest news. The dollar was slightly higher on the day. 8 points is not very much higher, slightly higher. And tonight it'll probably lose that ground as foreign currencies are moving a bit. Remember, we're going to hear from the European Central Bank on some of their monetary reforms that they've been talking about, and we'll see what the bank decides to do. That should be out, I hope, in the morning. I'd love to get that out of the way and know which way the euro is going to go off that news. When we look at the S&P, well, a new all-time high. That's where you're at on a weekly closing basis at this point. You're up another percentage point. For the week, you're up 51.5 points. Wow. Just keeps going. You can see how the market, yes, it's a consolidation, but a bend to the upside. You'd have to come in and take out now, in my opinion, 50.94.75 to do some damage to the pattern that's been one of continually making the higher highs. Sometimes we get a break lows, but none of them have been under the prior break low going all the way back here. That's the most recent low in February, and the market has managed to keep higher highs, higher lows on the swing line. The resistance is likely to come in at the upper Bollinger Band. It often does. And if you don't believe that, you take a look. Tell me that you're not seeing that. Coming in there is not a sell sign. It is a sign that if one were buying on the breaks, you're taking some money off the table. Don't get that confused with the sell signal. There's a very big difference between coming out of long positions and getting short. That is not what this calls for, okay? This is different. First of all, you're over the 18-day average, so your bias stays to the upside. Next, as we take a look at what the market is doing through here, you can see that the market is fighting a big battle. It lost, if we come together here, and I do want to show this. You had an embedded reading that you lost for 2 days. Flirted with losing it. This was yesterday, for sure lost. Today it's trying to gain the whole thing back, but it takes 3 days to get it back, or 2. It's an argument I can make. Because the market didn't close under 79, and I'm going to come to that, this is a big what-if scenario. So let us come back over here. Here you have your embedded readings, all right? And now You close at 77 and then 72. Now you lose the embedded reading. You don't gain it back right there. Now the market is fighting its battle back and forth, and that battle is continuing even today and tonight. You would have to close to embed again, which means converting the momentum from being overbought to locking in bullish again, not only higher tomorrow, but the day after. Very difficult. I'll let somebody else try to predict that. I don't know how you can do that. In the NASDAQ, we keep finding the support at the 18-day average of closes. Do you agree with that? I mean, since mid-February, you had one time where you got under it, and then from there, each time the market has fought its battle, it gets up to that upper band and thrown back. This is not as bullish a chart as the S&P. And by the way, the S&P has a seasonal that has now kicked in, and it normally carries into the month of April in a bullish mode. When we look at the Dow, it is just a game playing on either side of the 18-day average, completely void of going anywhere. You had your one peak, then you had a big correction. It's just back and forth and stuck in more or less sideways action. And you're correcting an overbought condition in the Russell that, similar to what we just showed in the NASDAQ, keep finding its support at the 18-day average of closes and the resistance at the all-important upper Bollinger Band. So important to learn how to work with that. By the way, if you want to take my course on how to work with Bollinger Bands the way that I teach it, the charting software that goes with it, the morning subscriber videos that are part of it if you're not taking them already, you just simply click up here at any point and it will say, it'll take you right to the area on our website, iraepstein.com, under education. Take you right into that. All right, in the 10-year notes, so you ran up, you fought your battle at that number I told you, you'd never embedded, you were overbought. This is where I thought the pros were coming out of the market. Yeah, it worked a little higher, but look how much lower it is. This market is fighting a battle. The support comes in clearly in the 110 area here. When you look at the 5-year note, is the market, and remember what I was saying, the battle was between, and still is, basically the 100-day average in green in the upper Bollinger Band, overbought condition, first move back under it. So the next support area is the 18-day average of closes. When we come into the dollar index, you spent 2 days under the Bollinger Band. You rarely go beyond 5. You've heard me say that over and over in futures. Works a little bit different in stocks. Came back up, and now you're fighting the battle at the 200-day average. If it continues higher, maybe the 18 in red and the 100, but this is your battle zone, and you're in an oversold market. Now, again, I'm going to repeat. I think the dollar wants to also see what's going to happen in the euro in the morning as the European Central Bank decides, are they going to do any money reforms to their monetary policy? I wrote about it in my full research. I'm not going to go through it here. In the euro itself, you can see the battleground, the 200-day average up to the Bollinger Band. It's so important, those Bollinger Bands. I mean, people don't realize if you never put them on a chart, you'll go, why did the market stop there? And if you don't learn how to work with it, it's not the Bollinger Band by itself. It's with momentum. You got to learn how to work the momentum. My slow stochastics will look different than yours. I modified the formula. In the British pound, you have a lower low, a higher high, and you're falling back. Now, Mr. Bailey, the governor of the Bank of England, today said they can maintain pretty close to full employment. They have a 4% unemployment rate, and inflation can still fall down. I mentioned, I give his words tonight in my research, he's very clear that he doesn't think that labor drives the inflation scenario. Maybe for their economy, but it seems to in the U.S. In Bitcoin, you're still with a fully embedded reading. You keep hitting Bollinger Bands, you back off, then you run back up to them. It's still a very bullish market until that red line closes under 79. Then we look at Brent versus WTI. It's been hanging right at that 18-day average of closes. When we take a look, and I have the titles right tonight, by the way, lower highs, lower lows, you're stuck at a center line right here. That's basically what is going on in a tight, narrow trading range. And you're tightening up the WTI the same way and just hanging at that battle zone. Now, as I told you, I think Rebob Gas is doing the same right through here. Back and forth action. I'm fully in the bull camp for the spring, summer driving. So the question is, as I said, if you have option strategies, you might want to go further out than the May contract. I certainly would. If you're trading options, futures, I'll wait for my signals to kick in. And in that gas, I'm still in the bear camp. I certainly realize the market's in oversold territory. Can it get to the lower Bollinger Band or close to it is really the question at hand. So I look at what we have going on there and I say to myself, okay, interesting markets. How do you work with these bands? Because they're so darn important. You may not believe it. I fully do. How do you do that? Well, if you take a look at the ad after this, you'll learn one of the ways to do it. Remember, you can come up here at any point, click an icon, or go to iraepstein.com. Under the word education, you'll be taught just how to work with it the way that I do it. I'm Ira. You have yourself a good evening. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.